What's up, everybody? My name is Keena Fedorchak, and my focus on this channel is personal finance and investing. Today, I want to show you my portfolio and just share my journey from basically $0 in the bank when I graduated college until today, where I have just under $200,000 invested in the stock market. So here I am graduating. I was so young and innocent back then. The first order of business is to open Personal Capital on my phone. This is basically just an app that pulls together data from different investing platforms and displays it all in one place. So we can see here, there is a total portfolio value of $191,298.43. You might be wondering how much of that is money that you put in versus how much is investment returns. Where did all this money come from? What's it invested in? Okay, we'll get there. But by default, you can see that it's just showing 90 days of history. So let's expand the date range so that it goes all the way back as far as we can go. Looks like it goes back to 2014 here. I think that's when I created my account. But the data really starts here in February 2017. You can see the about $10,000 that I had then. So now you can see at the top that it says that I'm up $184,000, but that's not right. That would be insane, a ridiculous return. What it's saying is that the amount of money that I've saved has increased by that amount since I started using the app. Anyways, I have not been able to figure out how to get Personal Capital to tell me what my investment returns are. It'll give me a percentage. But anyways, I keep track of every penny that I invest when I do it every 2 weeks in an Excel spreadsheet. So I'm just going to tell you, the amount that I've invested over the years is $131,576.53, which means that I have investment returns to date of $59,721.90 since I started this investment journey in 2017. And of that 60,000, nearly half of it came in 2020. That was a roller coaster of a year. So this is basically my entire portfolio. It doesn't include my house, which I'm in now. I bought this last year, and what's actually crazy is that the value of this house has increased by about $80,000, which is more than all of these investment returns, and it did that in under a year. Real estate is absolutely crazy, but that's not what we're talking about here. So let's start off with what investments do I have? So I started off with a simple 3-fund portfolio. This is the investment strategy that I'd recommend to virtually anybody. Whenever my friends or family come to me and ask, this is what I say. I think that no matter where you're at in life, you would do better and get better performance if you switch to that type of strategy. I'll get into what that is in a little bit here. So let's just take a look at what securities I hold. So holding an allocation. And I'm going to sort by value. Okay, and currently you can see that over 50% of my portfolio is VTI. This is a Vanguard fund that mimics the performance of the entire US stock market. And if you were to do a 3-fund portfolio, this is the biggest and the most important component of that. Last time I checked, VTI holds about 3,700 individual companies, which keeps you really well diversified. And in fact, you really only need a dozen or 2 dozen companies to be more diversified than you need to be. So this is a little bit overkill in a sense. I'm going to put the Vanguard website up here just so you can see how it's split out between different sectors of the economy. So if you see at the top, it says VTSAX. So that's actually the same thing as VTI. Just one is an exchange traded fund, that's VTI, and the other is an index fund, but it's the same product. An example would be like if you went and bought a Dr. Pepper at a store, if you bought it in a bottle versus a can, it really doesn't matter because you're buying the exact same product. You can see that no individual industry is overweighted. And then here we can see the 10 biggest holdings. It's a lot of technology. You can see at the top, Microsoft, Amazon, Apple, Alphabet, which is Google, Tesla. You can see some banking and consumer goods here. So the truth is that Vanguard has a lot of competitors who produce just identical products. John Bogle, who founded Vanguard, did invent the index fund, but there's nothing wrong with going with a Schwab or Fidelity, all US market index fund. It's literally exactly the same. But the truth also is that buying this type of fund will yield a better return than picking individual stocks 99% of the time. It's very rare that somebody can do better than this fund. In fact, Warren Buffett made a bet to a hedge fund manager in 2008. Let me throw the article up here. that an S&P 500 index fund would outperform the manager's entire company. And the whole mission of a hedge fund is to achieve substantially higher average returns than the market. And guess who won? So we can see here that VTI is just under 60% of my portfolio. But you'll also notice that I have VFIAX and VSCIX. That's another 35,000 or so combined. So when you hold both of those funds together, it basically mimics what VTI is. So why would I do that? Well, the reason is that those funds are in a 401k. And if you haven't had the pleasure of working with 401k providers, I'm being sarcastic. 401k providers are terrible. They usually limit the types of funds you can invest in to just a short list. I'd buy VTI if I could, but since I can't, I'm trying to make it perform. I'm trying to make my 401k perform the same as VTI by doing it this way. I also have about $15,000 of VXUS. This is another Vanguard fund. This one mimics the performance of international markets. So an index of international markets is the second component of a 3-fund portfolio, if you were to choose to do that. You can see that I don't hold very much relatively, 15,000 out of about 190,000. And that's because personally, I think the United States is the economic powerhouse of the world. I don't think China or anybody else is going to be changing that anytime soon. That's fine if you don't agree with me or believe me, but as somebody who's been to over 35 countries, trust me when I say our rule of law and our business climate is second to none. So these are not hard and fast rules in a 3-fund portfolio. You could hold, 50% international if you wanted. No problems there. So I'm just going to pause and say I highly suggest that everybody watching this video just start investing today. Pull out your phone. You don't have to use Vanguard. You could use anything, Robinhood, whatever else. The thing is that you don't have to understand everything before putting your money in. And I'm guilty of thinking this way in the past. I thought I had to get it, or I'd lose tons of money if I didn't fully know what I was doing, or if I didn't have a financial advisor. But you can think of investing like going to the gym. You don't need to know how to lift with perfect form or the perfect time to drink protein afterwards. You can go into the gym on day one and get the benefit. Now, it is true that down the road, you might learn new things. You might get better at working out. You might get faster and more results. But as long as you diversify your workouts, meaning you train different muscles each time you go, you'll be good and you'll get the benefits from day one, and you really won't get too injured. And the same thing is true with investing. As long as you're well diversified, you will get the results with minimal risk. You could even start by buying a share of VTI today. So recently I did start playing around with some niche ETFs. You can see here that I bought some of Kathy Wood's ARK Invest and her PRNT, or 3D printing fund. I also bought some Palantir stock directly and some Ethereum, which doesn't show up here. But those are high conviction companies for me. And even still, you can see I don't hold very big amounts of them. So I didn't mention the last component of a 3-fund portfolio. I just mentioned the first two, which would be a total US market index fund and a total international market index fund. The third component would be a bond fund. Currently, I hold 0 bonds for 2 reasons. One, because the Federal Reserve has been doing some unprecedented things with asset purchases lately. I'm not going to get into that. And 2, because I don't intend to touch any of this invested money for decades, meaning that I can wait out recessions or downturns in the economy. I'm not going to get too into detail with all of this and what the Fed has been doing with quantitative easing or anything like that. I think it would put us all to sleep. But if you want to hear about that, just throw a comment below and maybe I'll go nuts explaining it. So now you might be wondering, how did I get here? For starters, I'm not a trust fund baby. I didn't get a big inheritance or anything. I really just hope my story helps inspire others to start on their investing journey, because it is truly possible for anybody, especially if you live in the US. So I graduated college in 2013, and I'll admit it, college was kind of my idiot phase. I did get 2 bachelor's degrees. I graduated summa cum laude, which sounds impressive until you find out that one of the degrees was psychology and one was sustainability, which, newsflash, your GPA kind of doesn't matter when you study those things. You're highly unemployable. So then I decided, well, there's always grad school. So what if I go back to school and get a degree that will actually enable me to get a job, like maybe what I should have done since the beginning? So I actually took a year off in 2014, and then I enrolled in a Master of Business Administration, an MBA program. And I went through that. and I graduated in 2016. As you can see from the chart, which starts at 9 or 10,000 here in the beginning of 2017, you might be wondering, well, why is it positive 9 or 10,000? Why is it not negative hundreds of thousands of dollars for student loans for 3 degrees? How could that be? So the answer is that I busted my ass working the entire time. I earned a full ride in undergrad due to grades in high school, and then I worked full-time at the university that I was going to school at during my master's program, which gave me a big discount on tuition, and I also lived extremely frugally. I had a bunch of roommates, and basically I scraped together every penny I could and threw it at tuition. So when I finally finished my program in 2016, I was beyond burned out, just completely exhausted. That's an understatement. I was I was so tired that I actually passed up on a ton of opportunities that are available only to new grads. See, the way most MBA programs work is that tons of companies recruit people directly out of school, and they put them in like rotational programs. What that means is you kind of spend some time in one area of the company, spend some time in another, usually jumping around the country, and then you settle into something. But personally, I couldn't see myself picking up and moving. After 2 years of basically 80-hour weeks, I didn't have the energy. And then also all of my friends and family are here in Arizona, and I just didn't want to leave them. So I missed the boat on all of these types of opportunities, thinking something great would come along, where I live. Now, I realize I'm incredibly lucky to have started my professional life in the black and to have a master's degree. I know that only about 11% of the US population has one. And I really thought that was going to be enough to get me a great job right out of the gate. But it actually wasn't, not right away. Life is never a straight line. So, in February of 2017, when I started investing, I had been out of school for almost a year at that point, and I still hadn't figured out what I was going to do with my life. I'd been working at this point for the university for like over 5 years, and I was saving religiously as much as I could. But when you're making like 40 to 45K, the bills really stack up and it's hard to save anything. So I knew I needed to increase my income in a big way. And that actually didn't happen in 2017 either, despite me really working with recruiters and looking everywhere I could. My big break came in April of 2018. A recruiter found me and offered me a job at a small private aviation company here in the Phoenix area. I impressed them, and they offered me an initial starting salary of $80K, which was like beyond awesome. I became, in that role, a hybrid of a finance guy and a reliability engineer. And a lot of this I just learned on the job. I hung out with guys in the hangar, and I basically learned everything I could about the technical specifications, the engineering behind these airplanes, how the systems work and all interact. Here, this picture is basically a joke. They thought it would be funny to ask a white-collar guy like me with soft, uncalloused hands to remove the engine cowling off of this HTF 7000 turbofan. But I used this engineering knowledge combined with my financial understanding, and I would build these incredibly precise models to project both the failure rates and the costs, and then predict when the best times were to fix certain things, which would save cost and not sacrifice safety. So like the win-win, right? You see this big jump in mid-2018. And this is when I said, F it, and cashed out my entire retirement portfolio from working at the university. If I had left it, it was making modest gains, but I wanted to invest that money myself. So overnight, that added about $30K that I saved slowly over time directly into my portfolio. Then you can see this middle phase here that lasted about 2 years, and I was just saving like crazy at that point. I still had roommates at the time. I didn't buy expensive clothes, cars, nothing fancy. All of my extra money went into the stock market. And the reason is I understand Einstein called compound interest the eighth wonder of the world. And I knew that if I could get money in the market as young and early as possible, that would make a massive result down the road. So at this point, I had done tons of research and I knew exactly how to invest. I had all of this corporate finance knowledge from my Master of Business Administration degree. I worked in financial analysis all day at my job, and I studied personal finance in my free time. I didn't have a Wolf of Wall Street penny stock phase. I didn't waste time with dividend stocks because they just grow your wealth more slowly than index funds. And I wasn't willing to take on risk gambling with growth companies or risky ventures. Again, I'm not saying you shouldn't do that, but I had a low risk tolerance. So in 2018, I managed to save $31,754.79. And in 2019, I saved $33,660.59. And I put all of this money into index funds. specifically a 3-fund portfolio of VTI, VXUS, and a bond fund, BND. When 2020 rolled around, you can see that I had about $129,000 invested. And I had 2 realizations around this time. First, bonds were no longer worth owning. You see, when studying investing, I became a student of Warren Buffett and Warren Buffett's teacher, Benjamin Graham. I read their books, starting with The Intelligent Investor. And these guys were big into bonds. And that actually made sense in the past because there have been times, in fact, through most of history, bonds have provided phenomenal returns. But that's not how things are today. And again, that's the topic of another video. But really on this channel, I'm going to tell you things that are relevant to today. And today, bonds are not worth owning. So I learned a lot more about the Federal Reserve's monetary policy, specifically how they've been using asset purchases. This is called quantitative easing to provide liquidity to the markets during times of crisis. And that has decimated bond yields. Okay, I said I wasn't going to get into it. I'm not going to get into it any more than to say that in the beginning of 2020, I was sitting on about $20,000 in BND, the bond fund, and I knew I wanted to get rid of it. But also because the stock market was insanely high, I didn't want to just convert that into, stocks at the time. I wanted to hold and wait for the opportune moment to do that. My second realization is that real estate was just skyrocketing. And if I was able to buy a house, then I could increase my net worth both from stocks and real estate at the same time. In March, the market crashed because of COVID, and I took this opportunity to sell all my bonds. I had been waiting patiently, and as the market fell, I poured that money into stocks that were on sale. VTI got as low as almost $110 per share, and I just every week would pour more of my bonds into them. Then in May, I made an offer on the house that I'm in now. And at the time, I was a little nervous because I offered about $30,000 more than any house in the neighborhood had ever sold for. But joke's on everybody else because it's been increasing at about a rate of 10 grand per month ever since, and actually has eclipsed the returns on all of my stock market investing in a span of like 10 months, whereas I've been investing for 3 or 4 years. So crazy. Now, you might be seeing me on YouTube and maybe you noticed the clock on my phone and saw that it's the middle of the day on a weekday. Maybe you don't know what 1400 o'clock means. It means 2. Why? Well, this is because I work from home and my office here in Phoenix actually shut before COVID hit. So I've been working 100% remotely before COVID happened. And this really allows me a huge level of control in my schedule. I still work in aviation for the same company. My job has changed and morphed over the years, and I'm constantly crunching the numbers just like I used to, finding ways to save money without compromising safety. And my job really does come first. I'm not monetized here on YouTube. I don't make any money here. It's just a side hobby that I enjoy doing. But if you enjoy this type of content and discussions on finance and investing, hitting that like and subscribe button below would help me out tremendously. So yeah, that's my story. My investment returns are up just over 60K over the last 3 or 4 years. My house has appreciated way more than that, which is crazy. And I continue to live below my means, which is how everybody should live, and putting my money in the market to watch it grow. So thanks for watching, and I'll see you all in the next one.